Do you want to know how I passed these prop firm challenges and how I am making consistent profits every single month? If so, then this video is for you. In this video, I will teach you my most simplest model that you can use and pass your challenges. I've been using this strategy since 2021 and this works wonders, guys. I've already taught this method before on my YouTube channel, but I want to simplify it even further and I want to teach this again so you can learn this properly. Now, keep this in mind that most of you watching here are going to learn something from this strategy, and I can almost guarantee you if you go and backtest and forward test this strategy, you will become profitable. I'm actually guaranteeing you this. All right, so let's move on to the strategy now. All right, so here is the entire strategy. It is very simple. We are not going to overcomplicate things. It is like literally one of my simplest strategies that work like a charm. All right, so the very first method is we have to identify the order flow. We need to know where the market is going. Is it going up or is it going down? Now, auto flow is totally different from daily bias. We will not require daily bias in this video. We will only look at the trend. All right. So the very first step is to identify the auto flow. Are we going up? Right? So in this case, you can see we are going up. Now, the best tip that I can give you to identify a solid auto flow is to look at a clear trend. I don't want to see price consolidating, right, and just going up and down. I want to see a clear trend. Whenever I come to the chart of that specific pair or asset, I will know within a second that where the price is going by just looking at it. All right, I will give it a look. If it's going up, I know that the trend is bullish. Now I will keep on trading with that trend. All right, now what it does, it just greatly improves your win rate. It will put the odds in your favor. So the very first step is to identify the auto flow. Once you have identified the auto flow, all you simply have to do is to mark out the PD areas in the discount. So in this, that would be a discount area, right? Because we're going up. So by discount area, I mean auto blocks. So the order flow in this example, you can see I have drawn this is bullish. So we want to trade longs. We want to take long positions. Okay, so I will mark out every single auto block that is there. Now specifically, now in some scenarios the auto blocks don't necessarily have to be in the discount zone. All right, we want to utilize every single auto block, but it is always better to take your entry from the auto blocks that are in the discount zone, but it is not mandatory. We want to utilize every single auto block. Okay, so we have to look at the auto flow on the 4-hour time frame. Remember this, we are not going to use any other different time frame. We want to stick with the 4-hour time frame. When we see that the trend is bullish or bearish on the 4-hour time frame, we will be taking our entries on the 15-minute time frame, 1-5. All right, so we want to wait for price to come back into the 4-hour auto block. Once price comes back into the 4-hour auto block, we want to drop down to 15 minutes time frame. Once we drop down to 15 minutes time frame, all we are simply looking for is a market structure shift on a 15-minute time frame during kill zone hours. Now this is very necessary and a lot of people don't even use this technique. All they would do is take their entries during kill zone hours, but we also want to see a market structure shift during kill zone hours. This is very important. You have to keep this in mind. We want to see a market structure shift either during the London session or the New York session. If you get a market structure shift during Asian session, that is not a valid market structure shift because the Asian range is mostly considered as a liquidity pool or a accumulation phase. Now, once you get a market structure shift during London or New York session, you're simply going to take your entry from the auto block and go for 1 to 2 or 1 to 2.5, not less, not more. And once price gets to 1 to 1 or 1 to 1.5 risk to reward, you can go break even. Now, it is totally up to you if you want to go break even. personally, I do go break even once 1 to 1.5 or 1 to 1 is hit. If the setup is very good, I would hold it till 1 to 1.5 and then go break even. But if the setup is like normal, right, the market structure wasn't clear or whatever the case was, I would go break even right after 1 to 1 just to be on the safe side for protecting my capital. Now, this is the entire strategy, guys. It's very simple. It requires nothing at all. It's just you have to look at the auto flow on the 4-hour time frame, and then you have to mark out every single auto block, every single bullish auto block, right, that is going to push the price up. And from those auto blocks, right, or you could say support level, you can look to take your entries. The most important thing in this strategy is to correctly identify the auto flow. How do you do that? You have to look at the trend. Are we consistently respecting the bullish fair value gaps, auto blocks, liquidity pools, whatever might be? You just have to identify that correctly. And it is very simple. You will know it if you just come onto the charts, look at the chart for around 1 to 5 seconds. If you can just identify that within 5 seconds, then you are on the right path. But if you're just confused, like where is the market going, and it's taking you long to identify the auto flow, then don't trade that pair. It should be obvious when you come to that chart and you will know it. It's just going to be like shown to you. Yeah, very simple, guys. Auto block, market structure shift on the 15 minutes time frame, entry during kills on hours, market structure shift during kills on hours. We go for 1 to 2 or 1 to 2.5, grow break even after 1 to 1.5 or 1 to 1 is hit. Yeah, that's pretty much it. I'll give you guys a couple of examples, and maybe then I'll end the video. Make sure you stick till the end because the examples are gonna vary. They're gonna be different examples. And one thing is that this strategy might not work for you because I can give you the best strategy in the world, but it will not work if you don't practice, if you don't back test and forward test. You need to have experience with whatever I'm teaching you. You cannot just go into the live markets after watching this video. No, you have to back test, okay? Because if every single person watches this video and uses this strategy and becomes profitable, that is just simply not possible, right? Only some of you will be profitable and pass your challenges with this strategy. Only if you back test and forward test and have confidence in this strategy. This strategy works for me, and I'm not sure if it's gonna work for you. I'm being brutally honest, all right? It works for me, and I'm teaching you exactly what I use. And I'm almost certain that it is going to work for most of you if you back test and forward test. So let's move on to the examples, and then I will end the video. All right, guys. So here is example number 1. I'm looking at USD JPY on the 4-hour time frame, of course. So first off, we're going to look at the auto flow. Where are we going? So right after I came on the chart, I knew where exactly we are going. We don't need to go way back. Just look at the price action. Okay, where are we going? We are simply going up, right? It should be obvious to you by now. Now, let's see what happened here, okay? So over here, what do we have? We have this big bearish candle, right? And whenever there's a big bearish candle like this, we want to use the 50% of that candle, okay? Just to refine it, all right? So here is our auto block, right? We want to primarily look to enter below the 0.5 level of this candle or at the 50%. Specifically for the size of this candle, okay? Not every single candle. Now let's go to the 15 minutes time frame. Very simple, guys. This is literally my simplest model, and I love to use this model. All right, over here, what do we have? We dip down. This line here is the auto block. We dip down into this auto block. We get a shift in the market structure right around here. When did it happen? At 10. Okay, that was during New York kill zone. So that is perfect. Now what do we have? Consecutive bearish candles here. This is our auto block. We also have a fair value gap, but I love to use take my entries off the auto block. Now my entry would be at 11. That is still in the kill zone, so stop goes right below this low, and we will simply go for 1 to 2 or 1 to 2.5, and in this scenario you can see that 1 to 2.5 was hit beautifully. We went into some drawdown, but that is totally normal. But the point here is that we went into take profit level quite nicely. Now here is the thing, guys. I want to be extremely realistic with you. I do not like to sell you the dream. If you went break even at 1-to-1, you would have closed at break even, and that is the reality of trading. But if you held till 1-to-1.5, and I love to do that, okay, most of the time I'm holding till 1-to-1.5, because price will most of the time will give you an entry, go into some profits, then come back again into that same order block, and then to move towards that original direction. So make sure that I'll say just go break even after 1-to-1.5, and the take profit was hit. So let me give you guys another example. All right, guys. So here is another example. I'm looking at your cat on the 4-hour time frame, of course. So the moment that I came onto this chart, I knew exactly where the market is going. You can see the clean auto flow here. We are simply going up. I didn't have to think anything else. I knew exactly where the market is going by the time I was on this chart. All right. So now let's talk about this example here. Now on the 4-hour time frame, we have these consecutive bearish candles. That is an auto block. Price dipped into it, and then we had this huge expansion. So let's go to the 15 minutes time frame now and see what exactly happened on this auto block. This line that I've drawn here is the auto block. Price dipped into this auto block. We did have a shift in the market structure here, but it wasn't a clean shift. However, when we come here, you can see we have a clean shift in the market structure. This is the high. The candle to the left is lower, and the candle to the right is also lower. So that is a high over here. Now we have a shift in the market structure with the candle closure, and these consecutive bearish candles is our auto block. So if I draw this out like that, price dipped into this. We also had a shift in the market structure in the market structure during kills-on hours, and we also got our entry during the kills-on hours, and you can see this beautiful expansion to the upside that would have given you 1-to-2.5 without basically going break even. So let me give you guys one more example, and then I will end the video. All right, guys, so here is the last example. I'm looking at Euro AUD on the 4-hour time frame, of course. So over here you can see that we were bearish, but then we had a shift in the market structure here on the 4-hour, and then we also had a break of structure, solidifying that the new auto flow is in play. All right, now this is a bit risky approach, but it works. Okay, you don't have to always look for a established auto flow. You can also look for fresh auto flow formations, and that is when you use higher time frame PD arrays like weekly PD array. If price comes into your weekly PD array and then you get a market structure shift, that could be an indication that the new fresh auto flow is about to start. Okay, I hope that makes sense. So over here, what do we have? We have these consecutive bearish candles. That is your auto block. Now, if I drop down to 15 minutes time frame, you can see, oops, my bad. So this is the auto block. Price comes into this. Now, I'm going to give you a bonus tip. By now, you must be familiar with turtle soups. If you get a turtle soup on the 15 minutes time frame, and then you get a market structure shift, that will increase the win rate by 10 to 15%, even 20%. I'm not even kidding here. All right. Okay. 20% is a bit higher, but I would say 10 to 15%. Okay. A turtle soup is basically a liquidity, and then the price purges the liquidity and goes into the 4-hour auto block, and then you get a market structure shift. So this was a turtle soup here. Let me draw this out like that. And that is a bonus tip. Now over here, what do we have? We have a shift in the market structure during the kills on hours, very important. And this consecutive bearish candles is our auto block. We also had this fair value gap. We went into some drawdown here. That is absolutely okay. Stop goes right below this low, and we simply target 1-to-2.5 or 1-to-2. So that would be it, guys. I really hope that you guys learned something from this video. I have a couple of videos on this exact strategy on my YouTube channel, but I just want to let you guys know that trading is very simple. All it needs for you to become profitable is experience, practice. You have to back test and forward test if you want to really become profitable. I hope You guys enjoyed today's video. I'll see you guys in the next one. Goodbye for now. Mwah.